So I get a ton of questions all the time. I answer your questions. I look at them. I gave a webinar the other day with Tim Bohen, ran out of time. So here are 22 questions answered. I haven't even looked at them yet. I probably should have looked at them before I started this, but I seriously just ran out of time. Click the link below. I'm going to include a replay of that webinar with Tim Bohen. Amazing 1 hour of your time to listen to me and one of my oldest students. He's a part-time trader, but he's been making, roughly $50,000, $60,000 a year while spending more time with his family. So it's not just about becoming a millionaire. If you can make any money with trading, that's a good thing. Remember, 90% of traders lose. So if you make anything whatsoever, if you make $1, that's better than most traders. So I want to be honest with you. I want to be upfront. The good news, though, also is forget about just making $1. If you learn how to make $1, you can make 100, 1,000, 10,000, 100,000, maybe even $1 million. That's what scalability is all about. Reminder, I trade penny stocks. They're not scalable into the billions. Therein lies the opportunity. No one on Wall Street trades penny stocks. Most people on Wall Street mock this little niche because, even if you make $5,000 in a day, that's nothing on Wall Street. Let me know if you want to make $5,000 in a day. Leave a comment below. Say $5,000 in a day is enough for you. Say $5,000 a day is not enough for you. It doesn't really matter. That's what's possible. That's what I've been doing. Upcoming students like Jack Kellogg, Kyle Williams, now even Matt Monaco, 3 young challenge students. I'm also going to post a link to my challenge just below this video. That is where all my top students are coming from because they get all my DVDs, all my video lessons, the challenge chat room, which out of all the chat rooms that I'm in is my favorite little community. And most importantly, they get 2 to 4 live webinars every week. So if you like seeing me live trade, if you like seeing Q&A webinars, then the challenge is the place to be. Understand you do have to pay. Understand we weed out people who are non-dedicated. If you just want hot stock picks, if you have the wrong attitude, if you're lazy, don't bother applying. We are a tight-knit community and we're all focused on not just making money, but actually learning. It's good to be real in an industry full of fakes. So let's get to the questions. Number 1, can you recommend some good books for beginners? Blah, 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 blah. Yeah, number 1, my book, An American Hedge Fund. Yeah, I'm biased, but I wrote it because it's useful to you and it answers a lot of the questions. I'll post a link to that book. It's called An American Hedge Fund for free underneath this video. And you can buy it on Amazon right now for $20 or you get it free because I want you to learn. Second book, The Complete Penny Stock Course. I'll also post a link to that underneath this video. That's written by my student Jamil, who got tired of my lack of organization and he put all of my lessons in one place. I wrote the foreword to that book. So those are 2 books. Read those. Question number 2, I am brand new to trading. I can't figure out what I did wrong. Yesterday I bid $1.04 on GNUS, cut my losses at 94 cents. Today it spiked. How did I miss it? Well, first of all, it's not an exact science. GNUS was a better dip buy on day 2 than it was a dip buy on day 1. So if you've seen my video lessons on dip buying, you know that I like dip buying day 2, day 3, day 4 after a big run up. Day 1 can be a little choppy. So that's what you did wrong there. But at least you cut losses. Rule number 1 for me is cutting losses quickly. So try to cut a little better. That's a 10% loss. I usually cut losses at 1, 2, or even 3%. I keep it very, very safe. And obviously we're trading penny stocks, so nothing's completely safe, but I trade so conservatively, and that's what's allowed me to survive and thrive in this niche. Number 3, how do you play BLIN on good earnings? BLIN is a former runner. It spiked big after hours. It spiked big pre-market. When the market opened, it crapped the bed. Not all good earnings reports just continue to spike higher and higher. BLIN was more of a momentum play / short squeeze. It did not pan out, so I wouldn't even dip by it. It's basically a failed morning spike, and we see that a lot with penny stocks. Let's see. What's a good price range for new traders going long? You have to find what works best for you. Every single trader is different. I prefer stocks between $2 and $4 a share, and I try to make like 50 cents a share on my trades. That's my sweet spot. I have 20 years of data to back it up. Some people like trading stocks under 10 cents. Some people like stocks between $5 and $10. Try different price ranges, try different strategies, see what works best for you. This is question number 5. Is there a specific brokerage that one can use for day trading without being penalized? So you're talking about the PDT rule. If you do not have a US broker, then there is no PDT rule. But I think that the PDT rule is actually good because after now teaching for a dozen years, so many newbies churn and burn their accounts. They're overtrading. They're taking endless trades. The PDT rule limits you to 3 day trades per 5 rolling day period, but that's enough when you're new. And you can hold a stock overnight, every night. That's not a day trade. I use Interactive Brokers and E-Trade. Question number 6, is Stocks to Trade a broker? No, so Stocks to Trade is the charting / news platform that I use. If you click the link below and you watch that webinar that Tim Bohen and I did, we talk about a lot of the features on Stocks to Trade. It integrates with brokers. So I have my E-Trade account integrated with Stocks to Trade. So I can trade via E-Trade on the Stocks to Trade platform, but I also have news, breaking news, the social media search tool, which has come in handy. So it's like my platform, like it's my desktop. This is question number 7, trader checklist, video number 9. I'm excited to wrap it up. My question is, how do you know what day it is? I hear Tim say day 1, day 2, day 3, green day. How do you determine? So I like buying first green day stocks. The first green day is defined by like a big percentage gain, like 20, 30, 50, 100% gain on the day, ideally with a news catalyst. Good earnings, they won a contract, they're in a hot sector. I don't like buying so much on day 2 or day 3 because it's already gone up so much. With penny stocks, again, the whole world hates this niche. So a lot of people, even if it's the best setup or big news, they don't find out about it on day 1. That gives anybody who's meticulous an opportunity. It's an informational inefficiency where you can buy when the news is already out, but most people don't know about it because they don't follow penny stocks. So that's why I like the hate and the ignorance around penny stocks. It creates these inefficiencies. A lot of people hear about the good news on day 2. Dan Bilzerian's penny stock is a great example. I bought it after he had posted it on his Instagram story. The stock was already up 20% to the 130s. I bought it before the market closed. Everyone saw his Instagram story overnight. It gapped up to $2 a share. I sold. I made my 40%. 10 minutes later, it was at $4 a share. As all the idiots who follow Bilzerian used market orders, they were not meticulous. They just bought the stock, and then the stock never saw 4, let alone 3, let alone 2, ever since then. Now it's down to 50 cents a few months later. So you can be there on the first green day. But the second green day, and especially the third green day, I would not buy. Also, if you're shorting, I like shorting the first red day. The same kind of informational inefficiency applies where, a pump and dump or some stock that should crash loses its momentum. So it's like when a jet that's flying too high runs out of fuel, the first drop, that's usually the beginning of the end. And then it's an avalanche, whatever you want to call it. Question number 8. How do I know when my stock is tanking without reason and it's due to a connection to a boiler room overseas? Expect the worst out of every company and everyone in this niche and you'll never be disappointed. There's so many sketchy people, seriously. Can we make like a little sparkle on my tooth as I do that? Ding, ding. Yeah, like ding, right? Seriously, like every company down here in penny stocks, they're probably going to fail. Maybe they're a scam. Maybe they're a pump and dump. Maybe they're connected to boiler rooms. This is why Wall Street hates on it. But if you just expect the worst, you say, okay, this is probably run by a boiler room. Let me just be on my tippy toes. So I don't mind investing in a pump. I just know that it's a pump. So if it shows any signs of cracking or any signs of dropping, I'm out because I play overly cautious. Question number 9, do I buy breakouts right before the break or after? That's a good question. No two stocks are exactly alike. Sometimes I do buy the breakout before, like I buy a stock that's holding near its highs, but before it breaks out because I'm like, okay, that's clearly like the launching pad when it breaks the morning highs. But maybe it's overextended, maybe the news isn't that good, so I just want to buy it. Sometimes I might say, you know what, like this doesn't really have a catalyst, the news stinks, but it's testing the day highs. Let me see if it breaks out first. and then I got to see how the breakout is. Sometimes you have a stock that breaks out by a penny or two and then comes back down and it's a big fake out. So for me, it totally depends on the stock. I encourage you to watch my trader checklist guide. That's where I have 7 indicators, specifically going over different indicators, and you come up with a numerical value on the trade. That helps, and even that's not perfect, but at least it gives you an idea of what I'm looking at. It's not just the news, it's not just the chart, it's not just the market, it's not just past performance, it's all of those and more. Let's see, question number 11. Question number 10? I don't even know. This says question, this is question number 10. Good call, Pascal. This is Pascal behind here saying,
hey
say
guys.
Hi. We'll be real about this. We don't need to edit this at all. Like, that's the beauty of being real in an industry full of fakes. And again, like, you can ignore me, you can go against me. I encourage it. See what happens. Some of my best students lose by breaking my rules, and then they value my rules even more. So you're welcome to try. One way or another, you're going to have to learn the rules in this niche. Either I'm going to teach you, or you're going to not believe me, and you're going to learn the harder, more expensive way on your own. Let's do another little, yeah. Let's use that a lot. Let's see, question number 10. How do I recognize the setup of a supernova? Again, trader checklist guide, but ideally I want a hot market, which this is, hot sector, coronavirus stocks or anything related to that. A big percent gain already, because that means that it's already in play, up 10, 20, 30%, but it might go up 100%. Ideally, a news catalyst. They signed a deal with Apple. They introduced a new digital platform. They're being pumped by like these pumpers that we see all around these days. Use the stocks to trade social media search tool. You will be shocked at how many pumpers there are, and they all tweet the same stock at the same time. And you can see this with the social media tool and the breaking news tool, and it's laughable. Most people don't even know that a stock is being pumped. That's why, frankly, like if you have the right tools like stocks to trade, you have an advantage over everybody else. Question number 11, what are the signs that a stock is going to spike again and again? I'm having trouble figuring that out. I tried to dip by and I get crushed. Former runners become runners again. BLIN was the former supernova, but again, this time it had the news. It's a former runner. It's a hot market, but for whatever reason, it crashed at the market open. So it doesn't even matter if you have all the indicators. Like somebody might say like, oh, Tim, this had all the indicators and it still didn't spike. You're a fraud. And I'm like, well, like this is not an exact science. Recognize what the market is trying to tell you. BLIN had the indicators. I was watching for it, but at the market open, it failed. I was like, okay, thank you, Mr. Market, for helping me. Don't ignore price action, okay? The market is never wrong. You're often wrong. Pumpers are often wrong. Research is often wrong. Rumors are often wrong, but the market is never wrong. So if you have all the indicators, but for whatever reason, the price action is not concurring, listen to the market. Let's see, number 12, what do you see before OTC stocks spiking? Seems volume is hidden until after the move up in the market open. Well, OTCs don't trade pre-market. So again, that creates the inefficiency. Like with the Bilzerian first Green Day trade, when I made 40% overnight, I was very happy. That was more than I thought. But literally 15 minutes later, all the market orders got executed and the stock doubled. So the market makers sometimes hold the orders and they like to screw people who use market orders. Never use market orders. Again, this is why my top students and I are successful. We know rules. Most people don't. They're unprepared. So a lot of people who follow Bilzerian on Instagram saw him post. They're just like, oh, let me buy his weed company. I like weed. I like Bilzerian. They used a market order on Robinhood, some crappy broker, which I think is a terrible waste. And they used the market orders and they got filled 5,000, 10,000, 20,000 shares at $2, $3, $4 a share. Now the stock is 50 cents a few months later. And everyone's like, oh, Bilzerian sucks. Penny stocks suck. I still like weed. But they're just wrong. They were not meticulous and the market taught them a lesson. It's not penny stock's fault. It's their fault for not studying. This is why I teach, okay? I see so many unprepared students. And this is a battlefield. If you go into battle, if you go into war, and everyone's using machine guns around you, and you have a little butter knife, how do you think you're gonna do? Let's see. Number 13. Is the Stocks to Trade breaking news included in Stocks to Trade? No, it is an add-on. Think of Stocks to Trade as like iTunes, and you can do add-ons with different streams. And the breaking news chat is so crucial. I've made 163,000 so far now in 2020 in the first 4.5 months of the year. I would say probably more than half of that is due to the breaking news tool that I just began using. 80,000 plus in 4.5 months, and I trade conservatively and with a small account. Although obviously I know what I'm doing. I've been doing this 20 years. So ignore the breaking news tool at your own risk. Or the social media search tool. It's crazy to me that so many people think like these stocks are going up for the right reasons, when if you use the tools, you could see 50 people on Twitter pumping it in the same minute. It's just a social media pump. But so many people don't have stocks to trade. They're unprepared. They're holding that butter knife and they're making assumptions. Let's see. Question number 14. How can I be sure of the health of a stock that spikes may continue after a pullback? That is one question I have no idea on. Tim Grittani oftentimes holds stocks through choppiness. For example, we were both buying INO in the 9s when it was breaking out a few weeks ago, potential vaccine stock for coronavirus. I sold it in the 10s. I'm like, too rich for my blood, I'm out. I made I think $1,000. He kept holding till like the 18s through the choppiness, and he made over 100,000. Then he made another 100,000 shorting it. So for me, I get out very quickly and I don't hold through pullbacks. That's just me. Tim Grittani, who's more aggressive, cuts losses intelligently as opposed to me cutting losses quickly. I think that you as a newbie should probably cut losses quickly because you're never sure if the pullback is going to last or not. He has over $10 million, $11 million now in profits. He can afford to be more aggressive and speculative. Do me a favor and just be conservative in the beginning. You can get more aggressive when you have more money and more experience. Let's see, number 15. Do I think GNUS will grow? I mean, they put out a press release, they put out a shareholders letter, and I bought the stock around 75 cents. I sold it in the 80s because I was so conservative, but I made like $2,000. It finished the day in the 140s. So I underestimated that. But then I bought it the next day in the 120s and sold it in the 140s. Then it went to the 170s and I made $3,000. So I made $5,000 in 2 days on a stock I don't believe in. So no, I don't believe in GNUS. They're issuing these press releases, but they're being pumped up by all these pumpers. And they just reported earnings, which were terrible. And probably most telling, they have 65 million warrants priced at 20 cents a share. So those 65 million shares can cash in at any time, and the stock is at $1.50 right now. It should theoretically go down to at least under $1 a share. Even then, it's still 4 times more than what the warrants are priced in at. That said, if they issue enough press, if they get enough pumping, if they get enough volume, and they take out all of those 65 million shares at 20 cents a share, it might keep going. And because you have those warrants at 20 cents a share, a lot of short sellers think that it's overvalued, so they might get squeezed. And that's probably the best hope. So your answer is not easy. Fundamentally, it should not be this high. But in this hot market, if you catch the short sellers with a squeeze and you get enough volume and enough pumping and press, it can spike up like UAVS went from under $1 to $5 before crashing back down to $1. MVIS went from under $1, to the what was it? What was the high on MVIS? These are some other plays that were hyped up recently. MVIS hit $1.80, and I was buying it in the 30s. 30-cent area and selling it in the 40-cent area, and it went to $1.80. But now it's again back down to under $1. So I think GNUS has potential to spike. Probably won't stay there very long if they do catch a short squeeze, and that's not guaranteed either. Question number 16. If you have multiple brokerage accounts, can you get around the PDT? Yes. I think that you should have 2 brokerage accounts if you can. Like I use E-Trade and Interactive Brokers. That would give me 6 day trades in a week, which is more than enough for any newbie. I think 3 is enough, but if you can have 6, might as well take it. But I don't think you need like 5 brokers. Question number 17. How can you tell a stock is going supernova and not a quick rise so that by the time it's good to buy, we aren't missing out and buying in too late? Again, trader checklist guide. Is it a former runner? What is the catalyst? What's the float? What's the volume? What kind of market is it? All of that influences how good a stock is or not. And again, it's not an exact science. Sometimes I buy a stock and I think it has the potential to go supernova, but it only goes up 10% and I'm out. Sometimes I buy a stock, I think that it's only going to go up 10% and then it goes supernova. So recognize that this is not an exact science, but you're looking for multiple indicators to give credibility to your thesis. And you can be wrong on any stock. Remember, I'm wrong on a third of the stocks that I trade. I just follow rule number 1, which is cut losses quickly. Let's see. Question number 18. How high does volume need to be a good trade? It depends on the float, depends on the sector, depends on the market, it depends on the news. It's not just like, oh, buy any stock that trades 50 million shares. But there is a thing such as float rotation. So if a stock has, let's say, a float of 5 million shares, with good news and the stock is trading 50 million shares that day, the float has rotated 10 times. That means that there's a lot of buying pressure. Then it's supply and demand. There's not enough supply. There's a lot of demand. The stock price has to rise. Take an economics class. It's boring, but it's useful. Number 19, should we always avoid pre-market trading and wait 15 minutes after the bell to start trading? So this is Tim Bohen. He doesn't like pre-market. He doesn't like trading right at the open. I do. If a stock has news that's good enough, and I think traders are going to bid it up when they see the news. A lot of traders don't wake up like an hour before the market open. Those of us, like I'm quarantined in LA, it's tough to wake up at 5 a.m. If the news is good enough, if the setup is good enough. But again, this is not an exact science. You guys want this to be an exact science, like buy every stock at 8:30 a.m. It doesn't work like that. I bought Facebook stock pre-market years ago when they announced their breakthrough quarterly report that said their mobile ads were growing faster than ever expected, and that's turned into a whole business. That was a game-changing event. I don't normally trade Facebook, but that catalyst made me buy it. I sold it, when the market opened. I sold it way too soon, as it turned out. It was a multi-year run, but I recognized that news was very important. Let's see, question number 20. Help, I bought INSG at 1090 after a good earnings report, but now it's dropped to 980. Is it going to tank? How do I exit? You can exit anytime you want. A lot of people say this like, oh, I'm stuck in this stock. You're not stuck. You're stuck mentally. And that's a cancer that you have to cut out. Cutting losses quickly is the antidote. That is how you cut the cancer out of you, where you hold and you hope. Holding and hoping is never a strategy. So a company might have had good earnings, but the market didn't agree. Maybe some other indicator didn't agree, and you didn't even care about those other indicators because you just think, oh, good earnings, the stock should go up. That's your fault. That's your lack of research. That's your lack of preparation. That's your lack of discipline. So how do you fix that? Learn, study up, get disciplined. You can fix this. No stock is like, yo, I'm stuck in it. You're stuck mentally, so we need to unstick you. Let's see, question number 21. And this is why I cut losses quickly. You will see in a lot of my trades, I lose 1, 2, 3, 4% all the time. And sometimes the stock even comes back. Sometimes I cut losses, I lose 2%, and then the stock spikes 20%. And people are like, Tim, you're such a bad trader. I'm like, I stay disciplined. I cut my losses so quickly, sometimes I play it too safe, but that way I'm never concerned if I stick to my discipline. Question number 21. What is the difference between your chat room and the Stocks to Trade breaking news? Do we need both? I would have both. Like I said, this is a battlefield. This is all armor. I can, give you mental armor. I can teach you knowledge. I can teach you discipline. I can teach you rules and patterns. The breaking news, I'm not a news wire, right? Like the breaking news chat room is run by two former hedge fund guys. They break news all the time. They're subscribed to so many different news sources, and they're filtering through to only share the most actionable, most important breaking news items. So I use that. Even though I know the knowledge, even though I have the knowledge, and sometimes, the most important breaking news I'll either trade or sometimes I just alert my chat room, but I would use both. This is a battlefield. 90% of traders lose. 95%. There's been a few academic studies. They can't, agree whether it's 90 or 95%. The vast majority of traders lose. How do you get into the 5 or 10% of traders who win? If this is a battlefield, you need armor. Stocks to trade is armor, okay? Having the right broker is armor or your weapon. Some people say like, oh, I can't even trade some of the biggest percent gainers because Robinhood won't let me trade it. Robinhood is not a good broker if you want to trade low price stocks. They've lured in a lot of people who think that you need like something where it's like a nice app or it's like commission free. You're losing hundreds, if not thousands of dollars trading on a crappy app that has lured you in with marketing and ignorant assumptions, making you think that you're not going to get rich because you're spending an extra $5 on commissions. And now most brokers are commission free anyway. So I use E-Trade and Interactive Brokers. Those are the brokers that I use. Those are my weapons. If you have a lesser weapon on this battlefield like Robinhood, which is like a butter knife broker with that analogy, you're probably not going to do well. Question number 22. How do I consolidate watch lists and news with trades that I can capitalize on with a small account? Good question to finish on. I consolidate based on what I'm best at. So I'm really good at buying morning spikes or morning panic dip buys. Lately, I haven't been as great shorting. So I haven't shorted that much. You have to find what patterns you're best at and then look for those patterns. So in all my watch lists, in all my commentary, I'm looking for my favorite patterns. What is your favorite pattern? Every single person watching this has a different answer. You have to find what you're best at. How do you find what you're best at? You have to test. You have to tinker. You have to think of yourself as a scientist and experiment. You need to test with your little Bunsen burner in this analogy, and you need to test. And then you will eventually find what you're best at. And it might change over time. I have made millions of dollars shorting penny stock pumps, but now I'm better at buying breakouts. I'm buying dips. That's what's worked best for me. I still short every now and then, but I'm scared. Even CODX I was shorting the other day in the 13s. I think I covered in the 12s. They were linked to a boiler room. One of the questions said like, if you're linked to a boiler room, I think that was the one they were talking about. I made like 50 cents a share. People were like, why aren't you holding for more? They're linked to a boiler room. I'm like, I'm not great at shorting. I'm going to take my single. Guess what? 2 weeks later, the stock spikes, short squeeze up to 28. I would have lost more than I put in. So I focus on what I'm good at. I take my singles and I look to repeat the process. That's what I do. Leave a comment below. Just let me know what you think. I'm curious if you have questions. I'm curious to hear how you're doing. Like I said, it's good to be real in this industry full of scams, of frauds, of fakes, of newbies. I am none of the above. I'm just a hardworking, disciplined trader. I've been trading for 20 plus years. I've now been teaching for a dozen years. I'll answer all the questions. Hopefully they can help you. Again, if you doubt me, that is fine. Remember, my first millionaire student, Michael Good, wrote a blog post that said, Timothy Sykes is full of BS. So if my first hater becomes my first millionaire student, I can teach anybody. I'll give anybody a chance. But if you have a negative, toxic attitude, if you just want hot stock picks, if you think that you're just going to make $1 million without studying hard, get off my page. Okay? If you want stocks to buy, and you want to watch an ugly, bald man on CNBC tell you which stocks to sell, go watch him. Be right 35 to 45% of the time. Go nowhere in life. Help CNBC pay for more ads so that at least they can still make money even with multi-decade record lows.